So Amazon is making this absolutely massive $200 billion bet on artificial intelligence. The big question is this a stroke of genius or just a catastrophic risk? Today, we're going to tear down a professional equity research report to see what the experts really think is going on inside one of the biggest companies on the planet.
Okay, to really get a grip on the kind of scale we're talking about here, just look at this number. That's Amazon's market cap, $2.37 trillion. It's a company so mind-bogglingly huge, and, it's making a bet to match. So, the big question this report tackles is this. How does a company, even one this big, justify shelling out a staggering $200 billion on its future, mostly for AI? Is this a brilliant chess move to lock down the next decade of growth? Or is it a giant red flag for investors? Let's unpack the analysis.
All right, first things first. If you really want to understand Amazon, you've got to look past all those packages piling up on your porch and see where the actual money is coming from. So at first glance, this seems pretty straightforward, right? The retail side of things, both in North America and overseas, makes up more than 80% of their sales. And then you've got Amazon Web Services, AWS, their cloud business, looking like a kind of small slice of the pie at just 18%. But here's the thing. When it comes to what really matters, profit, this chart is actually pretty misleading.
And boom, this is where the whole story just flips on its head. When we switch over and look at actual operating profit, that little 18% slice from AWS is suddenly generating over $45 billion. That's nearly 60% of the entire company's profit. Let that sink in. Yeah, North American retail makes money, but AWS, it's the undisputed powerhouse. So yeah, the report really hammers this home. AWS isn't some side hustle. It is the high-margin financial engine that funds literally everything else, including that $200 billion bet on AI we were just talking about. Okay, so we've established that AWS is the cash cow. Now let's get into this financial paradox that the report highlights. And honestly, it's something that's got a lot of investors scratching their heads. So check this out. On one side, you've got Amazon posting a record net income of almost $78 billion. I mean, an absolutely incredible number. But then you look at the other side, and its free cash flow, the actual cash it has left in the bank, has just plummeted to only $7.7 billion. I mean, come on, seeing profits skyrocket while your actual cash dries up, that would normally set off all kinds of alarm bells, right? It really begs the question, is the company secretly in some kind of trouble?
Well, the report is super clear on this. Nope, this is not a sign of trouble. See, Amazon is generating record cash from its operations, almost $140 billion. The thing is, it's intentionally turning around and spending almost all of it, a totally unprecedented $132 billion, on capital expenditures. They're building the future, the data centers, the chips for the AI revolution. The key thing to understand is this is a choice.
Okay, so it's a choice, but is it a good one? According to this report, this one number right here, this is the metric that tells us everything we need to know. Now, this number represents something called Return on Incremental Invested Capital, or ROIC. Don't worry, it's simpler than it sounds. Basically, it's just asking, for every new dollar you plow back into the business, how much profit are you getting back out? And let me tell you, 26.1%, that is exceptional. It proves that for every single dollar Amazon has invested over the last 3 years, it's generating over 26 cents in new profit. Their massive spending isn't just big, it's incredibly productive. All right, so we've seen the profit engine, we've solved the cash flow mystery. So what's the bottom line? What's the analyst's final call on the stock? Is it a buy, a sell, or a hold? The report maps out 3 possible paths. The worst-case scenario, the bear case, could see the stock drop about 29%. But, and this is the exciting part, the best case or bull scenario sees a potential 54% upside. This is what you love to see as an investor. It's called positive asymmetry. The potential gains look a lot bigger than the potential losses. And even the middle-of-the-road case suggests a solid 16% upside. So why does the analyst think the stock is a bargain? Well, the main argument is that the market is making a classic mistake. It's getting spooked by that temporary cash flow dip and punishing the stock for it, totally missing that it's a productive investment. And the valuation numbers back this up, showing the market is only pricing in like 11% growth, which according to this analysis is way, way below what Amazon is actually geared up to do. And honestly, this one quote from the report just nails the whole argument. It says Amazon is this incredible machine just temporarily misunderstood because of this massive, deliberate spending spree that's going to be transformational. In other words, the market's seeing a problem, but the analyst is seeing a massive, hidden opportunity.
Okay, let's bring this all home. What are the key things you absolutely need to remember from this deep dive?
So the final official call from this particular analyst is accumulate. That's basically a buy rating. And they give it a really strong score of 79 out of 100, which shows a lot of confidence in where Amazon is headed.
All right, so if you walk away from this and someone asks you what's up with Amazon, here's what you tell them. 1. Its real profit comes from AWS and ads, not just boxes. 2. That scary drop in cash flow is actually a huge, deliberate bet on AI. 3. That bet is paying off with a crazy good 26% return on investment. And 4, because of all this, the analyst believes the stock looks undervalued because the market is just too focused on the short term.
So yeah, the analysis definitely leans towards this being a brilliant move. But it leaves us with this one huge lingering question. This $200 billion question, really. Based on everything you've just seen, is this AI gamble a visionary move that will define the next decade for Amazon? Or is it just an incredibly reckless risk for a company of its size?
All right, now for the important part. Just a quick disclaimer. I am not a financial advisor. The content in this explainer is for educational and entertainment purposes only. It doesn't constitute any kind of financial, investment, tax, or legal advice. Investing in the stock market involves significant risk, and that includes the potential loss of your principal. Remember, past performance is no guarantee of future results. Please always do your own research or talk to a certified financial professional before making any investment decisions. And hey, I'd love to know what you want to see next. Let me know in the comments which US stock you'd like me to break down in my next research note.
And of course, if you enjoyed this deep dive, don't forget to subscribe and hit that little bell icon so you don't miss the next one. Thanks for watching.